It seems like everywhere you turn these days, there's another expert warning about the economy.
Yeah. Yeah.
Are we heading for a recession? What does it all mean?
It's a lot to keep track of, that's for sure.
It really is, and that's exactly why we're doing this deep dive today.
Yeah.
Welcome back, the learner.
Absolutely.
We're going to take a look at a couple of pieces of information that you flagged for us. First, an 18-page report
Oh, wow.
from a major Wall Street firm with a pretty dramatic title.
Like what?
Something like Recession Risk Soars.
Oh, boy.
And then along with that, we'll also be taking a look at a financial analyst's video
Okay.
breaking down this report. And really interestingly, he connects it back to some of the things that Donald Trump has been saying
Oh, interesting.
in interviews recently,
Yeah.
particularly on Fox News about his economic plans and, all of those tariffs that he was so famous for.
Right.
So we're going to look at all of that and try to help you understand what it all means, what to watch out for, what the potential implications are for all of us. It is a lot. So we're going to try to cut through the complexity and make it clear what these concepts really mean.
Right.
Without, getting too bogged down in financial jargon.
Yeah, I think what's really fascinating here is how this analyst has sort of tied together these two different worlds, this very high-level economic analysis from this big Wall Street firm, and then what's actually being talked about in these political interviews. Just like there's this potential connection that we need to unpack a little bit.
So let's start with the Trump interview on Fox News.
Yeah.
What were some of the key economic ideas that he was talking about?
Well, he mentioned a couple of things, potential levers for the economy, talking about this upcoming tax bill and some sort of incentive package that he thinks is going to lead to lower taxes for a lot of people.
Right.
And he seems to think that that's really going to be this big stimulant that'll put money in the hands of businesses and individuals.
So kind of the classic, trickle-down economics.
Right, exactly. Stimulate the economy through tax reduction.
But didn't the analyst have some questions about,
He did.
how quickly and effectively any of that could actually be implemented?
Yeah, I mean, it's one thing to say, oh, we're going to have this new tax bill, but actually getting that through Congress, all the different timelines, those are big factors to consider.
Yeah, for sure.
Yeah.
What else was Trump emphasizing in the interview?
Well, one of the things that really came through was this idea of bringing wealth back to America, as he put it, and this focus on domestic manufacturing.
Right.
And it seemed like he was saying that, he's not necessarily worried about what the stock market is doing from day to day or even quarter to quarter.
Right.
He's really thinking long term about building up this strong industrial base here in the U.S.
Yeah, and tariffs seem to be a big part of how he wants to make that happen. Right?
Yeah. Oh, absolutely. He talked a lot about tariffs and the way he sees it is they're a way to encourage companies to either move their factories back to the U.S. Or at least, do more manufacturing here.
Right.
And he even hinted that he might impose more tariffs in the future.
Wow, so more to come, potentially.
Potentially.
And, he also brought up that trade deal with China that he made.
Oh,
specifically mentioning all the agricultural products that China agreed to buy.
He seemed to be pretty proud of that part of the deal.
He did.
Yeah.
He did. And the analyst pointed out that he definitely sees that as a success story from his time in office.
Right.
But the analyst brought in a really interesting point from the Wall Street firm's report about international trade today.
Yeah.
And how it's not as simple as it might seem.
Right.
It's not just finished products going back and forth across borders anymore.
It's so much more complicated than that.
So break that down for us. What makes global trade so complex these days?
Okay, well, think about all those components or semi-finished items, what they call intermediate goods. These are things that might cross borders multiple times before they end up in that final product that you buy. The analyst gave a great example, actually. He talked about how a semiconductor chip might be designed and even partly made here in the U.S., but then it gets shipped to Canada or Mexico for some specialized testing, and then it comes back to the U.S. to be put into a computer or a car.
Wow. So it's going back and forth all over the place.
Exactly.
So the point being that if you suddenly slap tariffs on things without thinking about all of these existing supply chains,
it could backfire in a big way.
Like a domino effect.
Totally. And these supply chains, a lot of them were built up over decades under these trade agreements like NAFTA and now USMCA.
Right.
You can't just reconfigure all of that overnight.
Yeah.
So, while trying to boost U.S. manufacturing might sound good in theory, If you just throw up these tariffs, all of a sudden it could really mess things up.
Right.
In the short term, at least.
And Trump did seem to acknowledge that there might be some short-term pain involved.
Yeah.
He called it a period of transition.
Right. He didn't say we're not going to have a recession.
Yeah.
He just said, look, big economic changes take time, and there are going to be some bumps along the way.
Exactly.
He even compared his approach to what people like Steve Jobs and Warren Buffett did, saying that they weren't just focused on, next quarter's profits.
Right.
They were thinking long-term about building strong, lasting businesses.
So it's like a long-term strategy, even if it means going through some rough patches in the short term.
Exactly.
But the analysts also pointed out that this long-term focus might mean that Trump is less likely to react quickly to a downturn.
Right, because if you're really playing the long game, a little bit of short-term volatility might not seem like such a big deal. And the analyst highlighted the fact that Trump said, we're not prioritizing the stock market.
Right.
Which could mean they're okay with the market being a bit shaky if they think it's going to help them achieve these bigger long-term goals.
Yeah, kind of like taking a few steps back to be able to leap forward in the future.
Yeah. And he also mentioned this transition period for tariffs on cars is ending.
Oh, right.
Which could mean he's going to be even tougher on trade enforcement going forward.
Okay, so we've got potential future tax cuts as a possible positive for the economy.
Right.
A strong focus on boosting American manufacturing through tariffs.
Yep.
And an acceptance that this might mean going through a bumpy transition.
Right.
Now let's get to the Wall Street firm's assessment of recession risk.
Okay.
As the analyst laid it out.
Right.
What are they most worried about?
So the report basically says that recessions usually happen when you've got an economy that's already a little bit shaky, and then something comes along and really shocks the system.
Right.
And the analyst pointed out that these downturns can happen really fast.
Oh, wow.
He called it hard and fast.
Okay.
And he said that a lot of times the stock market actually starts going down.
Oh, wow.
Even before most people realize that a recession has started.
So that's a really important takeaway for you. The learner, the stock market can be an early warning signal.
Like a canary in a coal mine.
Right. And the analyst even gave the example of the trade war back in 2018.
Right.
And how for some people buying stocks after that initial dip turned out to be a good move.
A good strategy.
Yeah, so it's not always a bad thing.
Right.
But you have to know what to look for.
Yeah.
But the main point of this report is that the U.S. economy is actually more at risk of a recession now than it was back at the beginning of 2022.
Yeah, they're saying there are a few things that have made the economy more vulnerable.
Okay, so what are these vulnerabilities that they're talking about?
Well, the first thing is that a lot of those extra savings that people had built up.
Right, from the stimulus and stuff.
Yeah, during the pandemic, that kind of financial cushion.
Yeah.
Well, that's mostly gone now.
Okay, so the safety net's not there so much anymore.
Not so much.
Okay, what else?
Another thing is that there are a lot fewer job openings than there were at the peak.
Yeah, you hear about that all the time.
Yeah. And then the other big thing is that it's a lot more expensive to borrow money now.
Right.
Because interest rates are higher.
Yeah, the days of easy refinancing.
Right, those are over.
Yeah. So it all kind of makes sense.
Right.
Less savings, less of a strong job market.
Yeah.
And it's more expensive to borrow money.
Yep.
That sounds like a recipe for trouble.
Yeah, it's not a great combination.
So what specific economic indicators were they really worried about?
Well, they pointed to a bunch of things, but a few really stood out.
Okay.
Like they mentioned that consumer confidence has really dropped, which is a big deal because, people's spending makes up a huge chunk of the economy.
Right. People aren't confident they're not going to spend money.
Exactly, and that can really slow things down.
Yeah.
They also talked about how there have been more job layoffs.
Right.
And that in some areas there are more new houses sitting empty.
Oh, interesting.
Which could mean the housing market is cooling off.
Okay.
And then they talked about this thing called the beaver curve.
The beaver curve. What is that?
It sounds a little weird. Yeah. But basically, it's like a seesaw with job openings on one side and the unemployment rate on the other.
Okay.
And right now, that seesaw is like perfectly balanced, which is a bit scary because it means that even a small increase in layoffs could cause the unemployment rate to shoot up.
Oh, wow.
And that would make it much harder for the job market to recover.
So that's definitely something to watch.
Yeah, for sure.
What else did they flag as a concern?
They said that there's a lot of long-term unemployment right now. people who've been out of work for like 27 weeks or more.
Wow.
And they also said that there are fewer people quitting their jobs.
Right.
Which is usually a sign that people are worried about the job market.
Yeah, they don't want to risk leaving a job.
Exactly.
If they're not sure they can find another one.
Right.
So all of that points to a potentially weakening job market.
Mm-hmm.
Now, let's bring it back to tariffs.
Okay.
How does the Wall Street firm see tariffs affecting the risk of recession?
Well, they're really worried about the impact on supply chains,
Right.
especially because so much trade in North America is in those intermediate goods.
Right, the components and stuff.
Yeah, and they use the example of those semiconductor chips getting tested in Mexico to show how connected everything is.
Yeah.
And their analysis says that tariffs could actually push inflation up.
Okay. And how would higher inflation make things worse?
Well, it could put the Federal Reserve
Right.
in a tough spot.
How so?
Because if inflation stays high because of tariffs, the Fed might not want to lower interest rates.
Right.
Even if the economy starts slowing down.
Wow.
Which could make the downturn last longer.
Yeah.
And it could even lead to what they call a deflationary spiral.
A deflationary spiral? That sounds scary.
It is basically, it's this vicious cycle where prices keep falling.
Right.
Which leads to lower wages, which means people have even less money to spend.
Right.
So prices fall even further.
Wow.
And it becomes really hard to get the economy back on track.
So a deflationary spiral is definitely something we want to avoid.
Definitely.
The report also talks about how economic uncertainty affects how people behave.
Yeah. They said that when people's incomes go down or they just feel less secure about the future, they tend to cut back on their spending even more than you might expect.
Yeah.
And they save more money just in case.
Makes sense.
Yeah, it's called cautionary savings.
Right.
It's like a natural reaction for individuals. But the problem is, when everybody does it at the same time, it can actually make the slowdown worse.
Because then nobody's spending money.
Exactly.
So it's like this self-fulfilling prophecy.
Yeah, in a way.
Okay, what about the overall financial conditions?
Okay.
The analyst said that they haven't tightened too much yet.
Right.
But he seemed to think that could change?
Yeah, he did.
So what does it mean when financial conditions tighten?
Well, it basically means that it's harder for businesses and people to get loans.
Okay.
You know, credit gets more expensive or harder to come by.
Right.
The analyst had this great analogy.
Okay, I love analogies.
He said, imagine you have a lemonade stand.
Okay.
When the economy is doing well, it's pretty easy to get a loan to expand your lemonade stand.
Right.
But when things are uncertain, banks get more careful about lending.
Right.
So they might not give you a loan at all.
Yeah.
Or they might give you a much smaller loan than you need. Yeah. So even if interest rates go down, if banks aren't lending, they can still really hurt the economy.
So it's like a hidden brake
on
economic activity.
Yeah. And, you know, on a more personal level, the analyst even suggested that homeowners might want to think about getting a home equity line of credit now, while home values are still relatively high, just in case things get tougher in the future.
Yeah, like as a precaution.
Yeah, exactly. He was very clear that this wasn't financial advice. But he just thought it was something worth considering.
Interesting. So it's like batten down the hatches.
Yeah, be prepared.
Okay, so we've gone through a lot of information here.
We have.
What are the main takeaways for you, the learner?
Okay, so it seems like there are these two kind of competing perspectives.
Okay.
You've got Trump, who's focused on the long term.
Right.
He wants to build a strong American economy, even if it means some short-term pain.
Yeah.
And then you've got the Wall Street firm looking at all these economic indicators and saying, hey, there's a real risk of a recession.
So it's like long-term vision versus short-term reality.
Yeah, and the key thing here, the learner, is that there's this tension between those two things.
Right.
You know, those long-term goals might actually make the short-term problems worse.
Right.
Or at least make them harder to deal with.
And it seems like there are all these different forces pushing and pulling. Tax cuts could help.
Yeah.
Tariffs could hurt.
Right.
Inflation could make things even more complicated.
Absolutely.
And nobody really knows for sure what's going to happen with trade policy.
Exactly. And that uncertainty makes it hard for businesses to plan for the future.
For sure.
So it's really important to pay attention to those economic indicators that the Wall Street firm was talking about. Yeah. And to remember that recessions can hit really fast.
Hard and fast.
Yeah. And the stock market often starts recovering before the recession is officially over.
So it's like a roller coaster.
It can be.
So officially we're not in a recession yet?
Not yet.
But there are definitely some signs that things could be headed in that direction.
The warning lights are flashing.
Yeah, for sure.
Yeah.
So as you can see, the learner navigating the current economic landscape.
It's tricky.
It is tricky. It's like this tangled web of what politicians are saying and what's actually happening in the financial markets.
Right. It's about understanding those different perspectives and how those different approaches can lead to different outcomes.
Yeah. Some of them good and some of them not so good.
Exactly.
So as we wrap up this deep dive, I want to leave you, the learner, with something to think about.
Okay.
We've talked about all these potential shifts in the economy, and we've talked about these big long-term goals that some policymakers have.
Right.
So given all of that, what are the key things that you're going to be watching out for in the coming months?
Good question.
What are those signals that are going to tell you which way things are headed? And how are you going to use that information?
To make your own decisions.
Yeah, it's about balancing those immediate concerns with the potential for things to change in the long term.
It's a lot to consider.
It is.
But as always, the learner knowledge is power.
Absolutely.
So stay informed and stay engaged.
And stay curious.
And we'll see you on the next deep dive.
Sounds good.